Okay, Emeka, the issue of policies, because that was also recommended, we need to enhance the policies in the capital market. At the moment, how are the policies?
Are you talking about government policies or policies from the capital market?
What are government policies and how they affect the capital market operation?
That is critical, because the education doesn't have just to do with schools. It also has to do with policymakers, because policymakers need to understand the fact that whatever policies are made have direct and indirect impact on the capital market, as a matter of fact on the economy as a whole. And so there needs to be this handshake between policymakers and the capital market. What we see today is the fact that a lot of policies that come don't seem not to take into account the effects it has on the capital market, and which is one of the reasons why we have the capital market where it is, which is one of the reasons why we have the low level of literacy within the capital market.
Okay, Aki, there is also the plan to engage religious bodies, youth corps members, all in a bid to drive the knowledge of the capital market more into the investing public. What do you think about this plan?
It's going to be a welcome development, because like I said, if you go back about 5-6 years ago, when we had a lot of IPOs, First Bank and Co., the critical mass, they did a better part of recapitalization for the banks then, when they were trying to raise their 25 billion. If you had visited the registrars, you'll have seen the volume of forms available from normal everyday individuals. So if all these religious bodies are sought after and they can educate people, then you'll be able to go to the grassroots. And when you get to the grassroots, you'll be able to put together the critical mass to be able to jumpstart the capital market effectively, whereby participation will be better, and you'll be able to have more people participate in the market, then more investors will be able to create good deals in the market.
Emeka, let's now talk about the 10-year master plan. What do you make of it? Okay, I was listening to the chairman of the 10-year master plan, Dr. Suleiman, at the meeting, and it said quite a lot. Of course, it's saying that the contribution of the GDP is low for now. Contribution to GDP in terms of capital market contribution to GDP is low at the moment. It also said that we're not able to meet with the requirements for infrastructure financing, which is a very key issue. Having to, if you have to increase growth and economic growth at that, we need to ensure that we're able to finance infrastructure development. So we're not able to meet up with the requirements yet in terms of the capital market, and the market is still underdeveloped.
That goes without saying. I mean, that's the point I was making. The market cap as a percentage of GDP is still very low. Even with our rebasing, it makes it even more glaring that there's needs to deepen the market, capital market further. And who is the biggest spender in the economy? It's government. And so the more the government looks towards the capital market, the more, because the capital market is a platform, is a route for development, for long-term development. That's the reason why we have infrastructure deficits all around. Mention it: power, hospitals, roads. Until we begin to channel development through the capital market, for so long are we going to be in that, which is why the 10-year master plan is being put together, because at the end of it all, we need to come up with recommendations. What do we need to do to ensure that our capital market plays the developmental role that it ought to play, and that it plays in other countries that we're trying to be like? Because in other countries, policymakers at the highest levels, they continuously watch their capital markets, see what is going, because that's the route through which you can develop an economy. I mean, yeah, because if the money markets, they're all for short term.
And also,
okay, you have something to say?
Yeah, yes, and also if you look at the federal government, also the federal government just put in place the national integrated infrastructure master plan. When they were putting that master plan together, they involved a lot of stakeholders. They involved ICRC and co. The whole idea about it is that, about the National Integrated Infrastructure Master Plan, is that it came up with the infrastructure deficit that we have in Nigeria. And there was a very good portion, that was a portion that could be financed by the capital market. But one of the major bans of this finance has to do with the legislations that has to be put in place to be able to clear the way for the capital market to be able to involve in infrastructure finance in Nigeria. If those legislations that are cleared and are put in place, then infrastructure financing from the capital market will start working better.
Let's move on to another issue that was raised at the Capital Market Committee meeting, and that has to do with savings, that our savings culture is still poor in Nigeria.
Yes, you know that savings culture has to do with disposable income, really. But if you look at the level of GDP vis-a-vis the level of income per capita per head, you realize that an average Nigerian lives below what is the global best figure. So it makes it a little bit more difficult for Nigerians to save money. But the savings culture itself used to be very, very strong then, 20, 30 years ago. And I think that it's still very poor now. And the Securities and Exchange Commission, in assisting to do that, came up with collective investment schemes. That's schemes that makes it possible that you can invest on that fund, and instead of having to invest at a direct investor yourself, makes it easier. If our young investors can embrace these collective investment schemes and can invest through mutual funds, all these small funds, then it will be possible for them to invest in it. But the savings culture is still very poor, and it can be improved by education and literacy improvement.
And getting more employment opportunities, because you can only save when you have a regular flow of income, apart from the fact that you need to get educated. Emeka, I'm sure you want to say something about that.
Say, first off, it's an attitude, and that's why starting from catching them young is where to go, because you need to have an attitude. Yeah, the issue of whether you have a job or not is a secondary matter, but you have to, because here we're talking about savings culture. Culture doesn't just come overnight. You start you build a habit, and that habit becomes an attitude when you practice over time. Because unless you have that attitude, even if you have a job, you won't still save. And so that's why education is key. We need to begin to teach our younger people, our children, that and again, what do we see? What do our children see? With us, how frivolous are we with expenditures? How the kind of lifestyles that we live, and they see all of those things add to this culture, whether it's there or not. Of course, the point you have made about having an income is very, very important. And so, for example, the president, our president, just set up 2 days ago a board for job creation that is chaired by the vice president. And what was the mandate? The mandate is get jobs, create jobs for our people. But first and foremost, as far as savings are concerned, we must get into the attitude that if you have 10 naira, for instance, you must know that you must build that culture that 1 naira out of that 10 naira you must put away.
Okay.